Thank you very much, and nice to be here again. And I started preparing for this presentation by actually watching last year's presentation and seeing what we said, and basically seeing where we've come in 12 months. And I think it's been quite a good journey for us. There's the disclaimer, but actually it's quite a good picture of this is central Ulaanbaatar, capital city of Mongolia. And it's a very vibrant city, lots going on, a lot of growth, young environment, and a very solid democracy. So a good place to do business. So why Mongolia, and why are we there, and what are we doing? So really it's all about the scale of the project and the gas thematic in Southeast Asia. Probably everyone's seen in the news that there's been an MOU signed between China and Russia, just recently, and Mongolia, of course, to run the long-awaited Power of Siberia 2 through Mongolia to China, which really means gas is going to be supplied into China for at least another 50 years, if that and when that project gets done. So we're down in the South Gobi Basin, 20 kilometres from the border, very close to obviously China and the east-west gas pipeline system. And already after, in a relatively short period of time, booked a 1.2 TCF contingent resource, and busy at the moment trying to demonstrate that can be commercial through a pilot well program, which we'll get to. But really, so the two themes of this is about the scale of the project and where this can get to. Sorry, wrong way. And obviously bring in expertise. Where this got started is bringing expertise from Australia, Queensland in particular, for the industry that grew out of nothing to be what is now a multi-billion-dollar industry. So just for the benefit of this conference, I decided anyone who's ridden from the Rottnest pub to the West End knows how difficult that is into a southwesterly. Our permit is 442 times the size of Rottnest. So it just puts into perspective from a local perspective. And what is our contingent resource of 1.2 TCF is only over a 75 square kilometre area that we drilled the exploration wells. So 1.2 TCF, again, a lot of numbers get thrown around, but what does that mean? That's 12 50 megawatt power stations running for 30 years. Again, what does that mean? Well, that Rio Tinto used 300 megawatts of power a year at their Oyu Tolgoi gold copper mine in Mongolia. So that's 30 years of half of our resource to power that mine. All that power does come from China at the moment, and so there is a desire and obligation, I think, to get that power from Mongolia, and that's a problem because there is no source for that power at the moment. Just seeing a little graph there of, how deep these wells are. They're not very deep, but the open section we have for the coal, we're about a 100-metre production section in each of the pilot wells, all of which have about net 50 metres of coal in them. And so when you look at that on the scale of the Sydney Harbour Bridge or the Western Hotel, it does show the scale of what we're trying to do here. So just on the company, more recently we've just appointed Glenn Corey, who was just down here a little bit earlier. He used to be the MD and CEO of Sinogas, which many, in fact Argonaut, were major supporters of in China, doing coal seam gas, and that eventually got taken out for around about $600 million by a private equity group. So I met Glenn, as you do, met Glenn at the cricket last year, and we started talking. He did his due diligence, talked to various other parties around, and he came and had a look at our project and got very excited and could see the analogies there. So that's been a great addition to the team. Otherwise, the board remains unchanged. I took over as CEO in July last year, and we can talk about what's happened since then. Here's a pretty ugly share price graph. It doesn't make anyone feel particularly good about it, but look, we're in the process of doing something about that and getting out of this range of trading, and also a bit of a restructure is on the cards, no doubt, in the coming months. But board and management own a big chunk of the company, including a major shareholder out of Mongolia. But more recently, we've introduced some pretty high net worth guys out of the East Coast who've really got on board and helped us out last year. We raised a bunch of money to drill more wells in the pilot well program, which we'll get to. And they're very supportive. Again, just here in the hotel earlier, having a few meetings with them. And look, really have been up to Mongolia, seen it, which I think is very important to actually see the scale and size of what we're trying to do up there. And we've invested a lot of money, and we've got a proper pilot well project running down in the South Gobi. So, from that point of view, what's the leverage to the upside? Well, we've spent a bunch of money in the last 12 months drilling a bunch of wells. It's really got our pilot project from a 3-well pilot where if one well goes down, you need to do something about it because you start going backwards pretty quickly if you don't keep producing the water. And to a point where we've got 7 wells in the ground, all relatively closely spaced, all producing gas and all reducing the reservoir pressure. So it's in a good spot. We don't have to spend much more, any more capital really on the pilot well project. We've made the major investment to date, and now we're in a position where we should get to the what we call the critical desorption in the near future. We call it 3 to 6 months. We've got a lot of work being put in at the moment with reservoir engineering, a lot more data, a lot more technical rigour around looking at the reservoir, and some good data is coming out of that. Look, this is just I won't touch this, but this is really, we've moved pretty quickly from being a private company, brought in Talon Energy, who farmed in, Dave Casey, who's here. They drilled the initial exploration wells for us to earn an interest. We bought that back when, or at the same time as Talon got taken over by Strike. And then since then, really, as I said, attracted new investors and pushed the project forward quite strongly in the last 12 to 18 months. So, with the first pilot, as I said, sort of job done there. It's producing, we're going about it in a slightly different way, which requires us to go a little bit slower than maybe we were doing in the first instance. I think these rocks, all coals are different, and these rocks are different to the coals in Queensland, different to the coals in the US, and we need to learn as we go. So I think we're learning a lot, and we're taking it slow, particularly with this latest well, which, possibly due to this reason or not, is become our best producer in the field and very quickly producing gas. So that's been very positive. And also the reservoir pressure is coming down. So we don't have monitoring bores as such, but we do shut in the wells, every now and then just to monitor the pressure. And every time we've done that, the pressure in the reservoir is seen to be declining, which is of course the key to getting the gas desorption. The immediate market around us is the mine sites. There's, again, if you went down there, it's an enormous operation of 3 or 4 operating coal mines in the immediate area where we are, which all run on a grid, all gets its power from China. They, like us, get interruptions in their power supply. So reliability is a problem, and that's something we think we can address pretty quickly, not only for our own operation, but also for the regional coal mining industry. And Mongolia is very much akin to WA in the sense that it's a very big mining jurisdiction. Most of their GDP comes from the mining industry. So the pilot well project, well, what have we actually done? So we've drilled these 7 wells. All the details across the top there. They're relatively shallow, relatively cheap to drill, and they all have a big, thick coal in each of the wells. So we drilled 6 and 7 to be on production shortly, which actually it is now. It wasn't updated, sorry. And they're all producing gas, so that's a great positive. And as I said, moving forward to getting that pressure down where we get an exponential rise in the gas rates. Everyone asked about commerciality. What's a commercial rate, for these wells? Look, we're working on the what are type curves and what are the EURs from these wells based on the reservoir modelling that's being done at the moment. But in general, we think 100,000 scuffs a day for a well, because they're so cheap and your production costs are so low, is definitely economic. So, we're meeting all our deliverables. Last year, again, I looked at the presentation I made, we had 3 wells in the ground. We didn't actually have the funds to drill the next 3 wells. We were planning on it. We had them all lined up. But we did get the funds raised. We did drill the wells. Again, Mongolia is not, we're in the South Gobi Desert here. There's one drilling company that's a Canadian listed company called Major, who do the drilling for do all our drilling in the pilot wells. And so, logistically, it's not easy, and there is risk in drilling. And so to get 3 wells down and a 4th well just recently without any incident, without any re-drills, it's been a pretty good effort from everybody with a small team and a relatively small budget. So obviously our next deliverable is increasing the gas flows. That's our complete focus at the moment, to manage the reservoir, not do any damage to these wells, do it slowly. And we're using some expertise that was working on the Elixir project in the past. Hopefully we'll get there pretty soon on that. And certainly the gentleman involved, a reservoir engineer out of Houston, new to the project, no real sort of a bias one way or another, and certainly looks at the project and sees that, and based on his modelling, sees us getting there reasonably soon. Obviously, contingent resource, we've got a large contingent resource at the moment, but there's some very obvious places to go exploring, which is not too far away, which we'll just touch on. As I said, just driving a bit more technical excellence and securing funding partners over the next 6 to 12 months, being a larger partner to come in and do the next phase of this appraisal or development is an objective for this year. Look, I won't go into this. I think everyone knows how CSG works, but basically taking the water out of the coal, reducing the pressure in the reservoir, and then there's a chemical desorption that happens where the gas comes off the coal once the pressure is below a certain level. So the analogy, I guess, is taking a bottle top off a fizzy water, and when you take the pressure off, the gas comes out. Just on where are we? And this is a little bit of a schematic heat map, if you like, of the pilot project, just for demonstration purposes. But all those the wells there, you're seeing the pressures have been measured over time, have been declining. So we see the pressure sink being created within the centre of that of the pilot project, and the data sort of supports that. LF6, which was one of not the most recent well, but the one we've done the most recent pressure build-up tests on. You can see, I'll point here or not, but LF6 is the bottom right-hand side there. The trajectory of that decline is much quicker than the other ones, as you'd expect. So just growing our resource base. The beauty of this permit is there's a lot of drilling's been done in the past by the coal miners for coal exploration. So we have a huge amount of data. Naran Sukai is the area we went to first because there is a coal mine right there, but also there was a huge amount of data, 75 square kilometres. But in the middle of the block there's an area called Sumba. Again, lots of drilling, lots of data, and the key there is to prove permeability and producibility of the coal. We know have fairly good idea on gas content already, and the size of the coal seams, etc., and the thickness. But it's about proving the permeability in the coal and getting good water production as well. So we'll probably kick that off later on this year through a small program. The domestic supply opportunity, I think we've talked about the immediate opportunity around us, which is the 35 to 70 megawatts of power generation. It's required by the coal miners, so there's an immediate market there. The longer term market in Mongolia is, and we would need to connect into the greater grid. Electricity grid is obviously RIU and Oyu, but there's plenty of other projects that are not proceeding in Mongolia purely because they don't have the energy to support the mining operations. I think Xanadu's just been taken out by a group in Mongolia, a Mongolian back group, I should say. But Xinjiang Mining are there. Some of the biggest mining companies in the world are there, and they're all looking for power and water, as it turns out. So then, of course, there's the elephant in the room, which is China to the south. We certainly believe, and I think many people believe, that China's thirst for gas is not going to decrease, and if we can prove up a resource that's of the size that this is, and or this could be, then I think they're an obvious partner for us going forward, but B, ultimately, take out of the company, I think would be where this is ultimately heading. On that basis, and I've got time is running out. We signed a strategic alliance agreement with a group of China, ex-Shell guys, all well known to Glencore and trusted, and that's very important just to get the right people and meet the right people in China rather than just going it alone, basically. Thank you. That's all.